Welcome, May 29th, the Market Update Desk. Unfortunately, my mojo, good thoughts, good vibes for continued warm weather yesterday did not work. Obviously, those in town know it's a little chillier today. I've got a jacket and not quite as good as I was hoping. Sorry, everybody, I failed in trying to bribe Mother Nature. So, got a few things going on today. Once again, the market never rests, as shown by late yesterday after hours trading. The One of the courts in the United States for international trade rebuked President Trump and indicated he could not do reciprocal tariffs. So what that did is help bonds after hours, and we've gotten even better a little bit today from that momentum of that ruling. Obviously, there's a long way to go on that. There'll probably be an appeal, but the market, yeah, it never sleeps. Now we did get this morning the second look of first quarter GDP. Came in a little bit better than expected. Came in at down 0.2% versus the expected down 0.3%. That was a little bit of a surprise and showed that we still had a lot of purchases that were happening prior to tariffs as a pull forward. Now, personal spending. This is what the bond market ended up liking. It was up 1.2% versus market expectation of 1.8%. Now, this shows a little bit of what the market didn't expect. It appears that there's less pricing pressure than the market was forecasting as it relates to tariffs. So the bond market really did like that. We also had apartment lists came out with their rental index, showed that rents were up 0.4%, and vacancy rates stayed at 7%. So we're showing continued muted growth on rents, which we said it for a long time, will eventually flow into CPI and PCE. The question is, how long is that? Is that delayed effect finally going to give us some traction? Jobless claims, a little bit higher than expected. Initial claims came in up 14,000 to 244,000, I believe the number is. And continuing claims for yet another month above 1.9 million came in at 1.92 million. Yesterday, after hours, the market got the juice that it needed. Nvidia posted earnings as a beat on top and bottom line, and Nvidia was up, I think at one time, $8.50 a share, kind of settled in at about up $5.50, $6 a share. So we are seeing some green in the stock market and red in 10-year treasury, which is good. The yield has come down to, I'm looking about 4.437 for a while in pre-market. We were actually up a tick above 4.5%. So that's great news. We see this indicator of a potential positive stochastic crossover, and this just helps that potentially come to fruition, which means potentially better mortgage rates. We'll stay on top of everything. Tomorrow's the big dog day for the week. We get PCE. We'll be all over it. We'll do an initial breakdown and then a more detailed breakdown in the afternoon. Give us a call. We'll help you with all your mortgage needs, explain the market, and give you the information that you need. Scott Riley, the Market Update Desk, 616-293-2189. By the way, go Tigers. Another win yesterday. Take care, everybody.